Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So usually we have prepared the weekly report. Here we have taken a look at some information concerning how economists treat the current situation in the economy, and actually we are getting more and more confirmation of our long-term view. So this time we have shown you the opinion of the Mr. Bosser. He's the manager of the Credit Suisse, so he also points on the structural type of the recession, that it should last longer, the interest rates should hold higher and for a longer time period, and actually he expects that it should be L-shape recession rather than V-shape, and all this stuff confirms what we have said, and we then compare this suggestion with the performance and the Fed strategy that's suggested by the market, and come to conclusion the market is wrong with the anticipation of the interest rate performance within the 6-12 months probably. So that brings a lot of different opportunities for the gold market in general, taking into consideration what Fed does and what really economists think about the current situation, what recent markets polls shows concerning the gold market. We suggest that gold market should be more or less on a positive mood with the probable upward continuation recently. So as a result of the recent non-farm payrolls report, we did not see a really big shift in the longer term strategy. So yes, in the short term performance, when we have the so strong downside momentum that lasted actually since the beginning of the year till this moment, and when we have the epic changes in the United States economy and in the global economy as well, is a really difficult geopolitical situation. It can't go smooth. Of course, we will get some really big volatility, some tricky performance on the gold market. In general, we think that it stands positive. And actually, if we'll take a look at recent performance of the non-farm payrolls report, yes, it was downside reaction. It looks solid on the intraday charts. On the daily chart, we do not see really big shift. So previously market was inspired with negative gross domestic product numbers. Now it was a bit stopped by the non-farm payrolls report. So next week it will be another driver, which is a CPI, and it might be really important. This weaker CPI number suggests that Fed should not be too active on the interest rates decision, and that may support the gold. Conversely, if we will have greater numbers, that could bring more pressure, and gold could start a bit deep retracement based on the technical picture, since market stands around the confidence, and with the performance of the euro currency that suggests the dollar strength on the next week. We also suggest that it should be some deep retracements, just because actually we have the bear trend, guys, and this is just as a retracement on the long-term action. We talked about this in our analysis of the weekly chart. So from the technical point of view, the chances on the pullback seems a bit better than on some strong upward continuation. Currently, bulls actually have nothing to do. It's just because market, take a look, it stands at the confidence resistance. It's not the proper point for taking the new short position. For new long position. Bears in turn have some things to think about. It's just because market stands near the confidence, and pullback, chance on the pullback stands not bad, and actually you just need to catch the right proper moment for position taking. But CPI could bring some more uncertainty in the current week, in the current price action. Personally, I prefer to see completion of the XOP target here. That's what I would like to get. It will be just perfect if, for example, on some volatility, maybe on CPI report release or something, gold could complete the XOP and then start downward action. That will be just perfect, because that will create great background for taking the short position based on the confidence on the daily chart and agreement. and that will be great basis for taking the short position. Maybe some pattern will be formed here, free drive or something of that sort. That's the one moment that bears could keep an eye on. Alternatively, if still somehow happens that market will start dropping immediately, then we need to take a look at these lows. So this is invalidation point for short-term price action. In the case of the downside breakout, this simultaneously leads to breaking of the confluence right there, and actually market will form bearish reversal swing, which tells us that upper direction is over and markets keep going lower. Also, the first sign of the coming reversal is already stands in place. You could see the divergence here has appeared with this recent action. So it means that market is preparing for the pullback. Pullback could be really significant. It's just because here you could see actually long-term action, this pullback, this retracement up, and then it might be maybe 1774 level, not excluding the 618 retracement as well. Maybe some patterns will be formed here. But in general, on two words speaking, bears have some things to do. As I said, our preferable scenario, if market completes the XOP, then you could drop your time frame, watch for reversal patterns here. Maybe here will be another pattern will be formed, maybe butterfly will be formed here until Wednesday. So you could directly use for taking the position. Alternatively, keep an eye on the breakout with important levels. Maybe you could use the stop sell order right below these areas. Market will suddenly collapse based on the weak CPI numbers. Well, you will be already in the market. For the bulls, it's actually nothing to do by far. Just seeing what will happen on the CPI report and see what will happen next, because it is not correct to take the position right in the confluence. You need the pullback correspondingly. As market stands right now near the confluence, it's not much to do. Only if you're a scalp trader, you could try to take the bet on the completion of the XOP with placing stop somewhere below the 1753. That's just minor upward swing that you could bet on. That's actually all that you could consider.